Something strange is happening in the Northeast housing market. Not loud, not dramatic, not the kind of crash that makes headlines. It's quieter than that. Buyers aren't panicking. They are not protesting. They're not even complaining. They're just gone. And that silence may be the most important signal of all. Pause. For decades, the Northeast was predictable. New York, New Jersey, Massachusetts, Connecticut, Pennsylvania. High prices, yes. High taxes, definitely. But also steady demand. People always wanted to be here. Jobs, schools, transit, history. The assumption was simple. If prices dip, buyers will rush back. But this time, they didn't. Why? To understand what's happening now, we have to rewind. Not to the pandemic. Not to 2020. Further back. The old Northeast formula. For most of the last 50 years, the Northeast ran on a reliable formula. Dense cities, high wages, limited land, strong institutions. This created something powerful. Scarcity. And scarcity did the heavy lifting. Even when mortgage rates spiked in the 1980s. Even when Wall Street crashed in 2008. Even when taxes climbed year after year. Buyers eventually returned. Why? Because they believed something deeply. That the Northeast was worth it. Worth the cost. Worth the congestion. Worth the cold winters. Homes here weren't just places to live. They were assets. They were status. They were security. A house in the Northeast meant you had made it. And for a long time, that belief held. But beliefs don't last forever. The first crack no one noticed. The first crack wasn't price. It was mobility. Before 2010, leaving the Northeast came with a cost. You lost proximity to jobs. You lost access to top employers. You lost career momentum. Then something changed. Quietly, technology made geography negotiable. Remote work didn't start in 2020. It started years earlier, slowly, invisibly. At first, it was a perk. 1 day a week. Then 2. Then fully remote roles appeared, but only for a few. Still, the idea planted itself. What if location didn't matter as much anymore? Most people ignored that thought. Until they couldn't. The pandemic didn't create this, it revealed it. When COVID hit, the Northeast was hit first. And hardest. Cities emptied almost overnight. Subways silent. Office towers dark. Restaurants closed. And suddenly, people asked a question they had never asked before. Why am I paying this much to live here? At first, it felt temporary. Everyone assumed normal would return. But something unexpected happened. Many people didn't miss it. They didn't miss the commute. They didn't miss the congestion. They didn't miss the constant pressure. And when remote work became normal, not rare, the old trade-off collapsed. High cost no longer guaranteed high opportunity. That was the turning point. Prices went up, but conviction went down. Here's the part most people misunderstand. Prices rising doesn't mean demand is healthy. In 2020 and 2021, Northeast home prices surged. On paper, it looked strong. Very strong. But look closer. A huge portion of those buyers were not long-term believers. They were rate-driven buyers. Pandemic-driven buyers. Fear of missing out buyers. They weren't buying because they loved the Northeast. They were buying because money was cheap. That distinction matters. Because when rates rise, conviction is tested. And this time it failed. The rate shock changed buyer psychology. When mortgage rates doubled, something subtle happened. Buyers didn't just lose affordability. They lost patience. A $4,000 monthly payment hits differently than $2,500. Not just financially, but emotionally. Suddenly, buyers started questioning everything. The taxes, the aging infrastructure, the property assessments, the winters. And for the first time, many concluded, this doesn't make sense anymore. They didn't downgrade expectations. They exited the market. The disappearance isn't loud, it's statistical. This isn't about open houses with 0 people. It's about something more telling. Applications dropped. Showings slowed. Contracts quietly failed to renew. Days on market stretched. Not because sellers were desperate, but because buyers were selective. Extremely selective. And in some areas, they vanished entirely. Especially first-time buyers. Especially younger professionals. Especially families who had options elsewhere. Where did the buyers go? They didn't disappear from housing. They disappeared from this housing. They moved south. They moved inland. They moved to states with lower taxes and newer homes. Places where the math worked again. Where a similar payment bought more space. More flexibility. More peace. The Northeast didn't lose demand overnight. It leaked it. Slowly. Persistently. Structurally. Sellers haven't fully realized it yet. Here's the dangerous part. Many sellers are still pricing homes as if buyers will return. As if this is a pause. As if this is cyclical. But buyer behavior suggests something else. This isn't a delay. It's a reevaluation. And once buyers change how they think about a market, they don't come back easily. A question that changes everything. So here's the question no one wants to ask. What happens when the Northeast is no longer the default choice? When it becomes optional? When buyers don't feel urgency? Only comparison? That's where the real shift begins. And that's where this story gets uncomfortable. We'll look at who stopped buying first, why that matters more than price declines, and how demographics quietly turned against the Northeast. When a market weakens, it never loses everyone at once. It loses specific people first. And those early exits tell you more than any headline ever could. Because the buyers who leave first are not the weakest. They are the most flexible. And in the Northeast, flexibility became the exit ramp. The first group to vanish, first-time buyers. First-time buyers are the market's foundation. They don't buy out of strategy. They buy out of life. Marriage, kids, stability. For decades, the Northeast captured them early. Small condos, starter homes, high monthly payments, but manageable. That system broke. Rising prices didn't just stretch budgets. They erased the entry point entirely. In many Northeast metros, the starter home no longer exists. What replaced it? Older homes, high taxes, deferred maintenance. First-time buyers ran the numbers. And for the first time, many said no. Not later. No. Why this matters more than luxury demand. Some people argue the Northeast is fine. Luxury homes still sell. High-income buyers still exist. That argument misses the point. Luxury buyers don't create momentum. They react to it. They buy when confidence is already there. First-time buyers create chains. One purchase unlocks another. Then another. Then another. Remove them and liquidity dries up. The market doesn't crash. It stiffens. That's exactly what we are seeing. The second group, mobile professionals. The Northeast was once unbeatable for ambitious professionals. Finance, law, healthcare, education. You paid more, but you earned more. Remote work changed that equation. Now income travels. A software engineer earning New York money can live in North Carolina. A consultant can work from Colorado. A startup employee can live anywhere with Wi-Fi. And once geography stops anchoring income, cost becomes impossible to ignore. These buyers didn't downshift. They opted out. They did hate the Northeast, they just didn't need it. This is important. People didn't leave because they disliked the Northeast. They left because the value proposition broke. The Northeast asks more of its residents than almost any region. Higher taxes, higher costs, older infrastructure. That used to buy access. Now access is digital. And once access goes digital, physical cost looks unnecessary. The third group, families doing the maths. Families are slower to move. Schools, relatives, stability. But they are relentless calculators. When families stop buying, it's never emotional. It's numerical. Property taxes rising faster than income. Childcare costs compounding. Homes needing upgrades just to function. Many families realized something uncomfortable. They weren't building wealth. They were maintaining survival. So they sold. Or never bought at all. Migration data confirms the pattern. This isn't anecdotal. Year after year, Northeast states show net outmigration. Not dramatic spikes. Consistent leaks. You don't need a mass exodus to change a market. You only need fewer buyers than sellers. And that imbalance is already here. Who stayed behind? The buyers still active in the Northeast tend to share traits. They are older, more established, less rate sensitive. They often already own property. That matters because owners trade less frequently than renters become buyers. Turnover slows, inventory stagnates, and price discovery becomes painful. Sellers misread buyer silence. Many sellers believe buyers are waiting for rates to fall. That's only half true. Some buyers are waiting. Others moved on permanently. They bought elsewhere. They changed life plans. They removed the Northeast from their future entirely. Those buyers don't come back with lower rates. They're gone. The market is losing its replacement demand. Every market needs replacement demand. When someone sells, someone else steps in. The Northeast is losing that second person. Not everywhere. Not all at once. But enough to matter. Especially in secondary cities. Especially in suburbs that boomed temporarily. A subtle but dangerous shift. Here's the danger. Prices can stay high even as demand weakens. Until they can't. What breaks markets isn't collapse. It's stagnation. Months with no bids. Price cuts that don't work. Listings that quietly expire. That's not a crash. That's erosion. The question buyers are asking now. Today's buyers aren't asking, "Can I afford this?" They're asking something deeper. Is this worth locking myself into for 30 years? And for the first time in decades, many are answering no. If the disappearance of buyers seems sudden, it's not. It's the result of decades of subtle pressure. Decisions made slowly. Policies that felt neutral. Choices that seemed minor at the time. Now they combine to form a market that feels heavy. Taxes, the invisible weight. The Northeast has long relied on high property taxes. They fund schools. They fund services. They maintain the infrastructure of dense cities. But there's a tipping point. When property taxes climb faster than wages, they stop being a contribution. They become a burden. Many families ran the numbers and realized even a modest home here costs as much as a larger, newer home elsewhere. High taxes are not inherently a problem. High taxes without clear benefits, especially when paired with aging infrastructure. Aging housing stock, a hidden cost. Walk through any Northeast suburb. You'll see charm, historic architecture. But you'll also see deferred maintenance. Plumbing from the 1960s. Roofs past their lifespan. Insulation that doesn't meet modern standards. For buyers, these aren't minor inconveniences. They are future costs. Renovations, repairs, heating bills, they add up. In a market where every dollar counts, they discourage entry-level and even middle-tier buyers. Policy decisions that quietly shifted the market. Zoning laws. Historic preservation rules. Permit delays. For decades, these rules shaped character. They maintained the Northeast's appeal. But there's a downside. They also restrict supply. They prevent new, affordable construction. They make it harder to modernize homes. The combination of high taxes and restricted supply. It creates a ceiling on affordability. Once buyers hit that ceiling, many leave or never arrive. Interest rates meet structural weakness. Rate increases didn't create the Northeast's problems. They exposed them. A 7% mortgage rate doesn't just increase monthly payments. It magnifies the cost of every inefficiency in the system. Old wiring, outdated roofs, high taxes, they suddenly matter in dollars and cents. And buyers who were already evaluating alternatives didn't hesitate. They moved. Why migration data matches these realities? Look at the numbers. States like New York, New Jersey, and Connecticut show consistent net outflows. Not massive in 1 year. Persistent over decades. These aren't anecdotal. They are patterns. Patterns that reflect economic calculation, not emotion. People are voting with their feet. The Northeast's strengths became liabilities. Ironically, many things that once made the Northeast desirable now exacerbate buyer loss. Dense cities, great for transit, but expensive to maintain. Top universities, still a magnet, but graduates don't always stay. Historic neighborhoods, beautiful, but costly to renovate. Every strength comes with a price. And every price amplifies the impact of rising rates, aging stock, and high taxes. Sellers are still in denial. Some sellers cling to nostalgia. We always bounce back, they say. But this is different. The market isn't bouncing back because the assumptions behind it no longer hold. The assumption that buyers will pay top dollar for location alone, gone. The assumption that scarcity ensures demand, fading. The assumption that high prices signal strength, dangerous. The silent pressure on younger buyers. Young professionals face a perfect storm. Student loans, high rents, remote work options. Why pay a premium for the Northeast when A. Remote work opens cheaper, spacious alternatives. B. Taxes are lower elsewhere. C. Modern homes exist that require less immediate maintenance. They vote with patience, and patience often becomes abandonment. The result, a market in slow motion. This is the subtle tragedy of the Northeast market. It doesn't collapse. It lingers. It stiffens. It frustrates sellers. It tests patience. Every unsold property is a signal. Every delayed contract is a warning. The market isn't failing dramatically. It's failing quietly. And quietly failing markets are often the hardest to reverse. The critical question ahead. So here's the question investors, policymakers, and families alike must ask. Can the Northeast reverse structural trends faster than buyers leave? If not, the buyers who leave may never return. The chains that once drove transactions may never reform. And the market that once seemed unstoppable may quietly contract. Winners and losers are already emerging. Not every city, not every suburb will be affected equally. Boston, Manhattan, and parts of Philadelphia still hold strong. They retain cultural institutions, high-paying employers, and global relevance. But secondary cities, smaller towns, and older suburbs face a different reality. Fewer buyers, longer days on market, price stagnation. The pattern is clear. Location alone is no longer enough. Strategic decisions will define survival. Some cities may adapt and thrive. Invest in infrastructure. Modernize schools. Encourage housing supply. Provide incentives for first-time buyers. Others may cling to old formulas. High taxes, slow approvals, outdated regulations. They risk slow erosion. Markets respond to incentives, not nostalgia. Remote work will permanently shift geography. Remote work isn't temporary. Companies have invested in policies, software, and culture to support it. Buyers have learned. You don't need to pay $1,500 a month in transit. You don't need a tiny apartment for proximity. You need a home that fits your life, cost, space, and flexibility. And many are finding it outside the Northeast. Adaptation or attrition. The Northeast can respond in two ways. Adaptation. Modernize housing stock. Reduce friction for buyers. Make affordability and lifestyle compatible. Attrition. Maintain the status quo. Wait for buyers to return. Watch the market slowly leak participants. One leads to resilience. The other leads to stagnation. The psychological shift is permanent. Even if rates drop tomorrow, the Northeast faces a new reality. Buyers are more mobile. Expectations are different. Commitment to location is optional. The old psychology, scarcity plus prestige, no longer guarantees demand. This isn't just a short-term shift. It's generational. Lessons for buyers. For those still in the market, the lesson is clear. Act strategically. Evaluate cost versus value. Consider long-term livability. Think about resale and flexibility. And most importantly, don't assume past market behaviors predict future trends. Lessons for sellers and investors. Sellers must adjust expectations. Price for conviction, not nostalgia. Upgrade homes that feel outdated. Understand the new buyer mindset. Investors need to focus on long-term structural demand, not just historical patterns. Markets can stagnate quietly, and quietly is expensive. A quiet transformation. The Northeast is entering a quiet transformation. It won't be dramatic. It won't make headlines. It will unfold over years. But it will be profound. Buyers aren't disappearing because they hate the Northeast. They're disappearing because the cost-benefit equation no longer adds up. The question now is if the Northeast will survive. It's which parts will thrive and which will quietly fade. The final thought. Every market has turning points. For the Northeast, the turning point isn't obvious. It's subtle. It's quiet. It's invisible to most. But for those paying attention, the first-time buyers, the mobile professionals, the strategic families, the turning point is unmistakable. The buyers are disappearing fast, and the future belongs to those who recognize it first.